Ladies and gentlemen, welcome back to Chihuahua Trading. As we prepare for interest rate decisions tomorrow on the Fed, this is probably the most important piece of the entire puzzle. Now, this information that you're about to see in this video, or what you're about to hear in this video, is something that could heavily impact your portfolio and impact your trades as a trader going forward. Now, there is one piece of the pie that is missing. Something has been happening in Japan. As you may know, over the years, Japan has held interest rates steady at near zero interest rate. And that is because the Bank of Japan has deliberately kept it that low via, rate control. They've basically controlled the bond market, the rates of the bond market, to keep it at near zero. Now, how does this heavily impact the US market, and how does this heavily impact the dollar and the stock market? That is exactly what I'm going to explain in this video. Keeping the interest rates ultra low in Japan simply means that a lot of investors can go to Japan, borrow cheap yen, and come over to the US and use those cheap yen that they have invested to buy the US government treasuries, to buy stocks in America, to buy corporate bonds in America, to invest heavily across all of America. Now, this now goes a long way to tell you that a lot of the money in the United States economy is coming right out of Japan. Now, in the event that, and the reason that is available is simply because the interest rates in Japan are ultra low. Now, the Bank of Japan has taken a step back from, doing that, keeping all that cost low. And we are now seeing interest rates in Japan, long-term bond yields in Japan, heading as high as 3.22%. And having it as high as 3.22% is catastrophic for US investors, or for investors who have borrowed yens to actually trade and invest in America. Now, that is what you refer to as carry trading, when you take money from a low interest rate region and use that to invest in a high yield region. Now, in the event that the Federal Reserve lowers interest rate, this could heavily impact the economy in an adverse way. Now, what that could simply mean is that, let's say, for instance, the Federal Reserve takes off 50 basis points from the interest rate, and we go from 4.25% now to 3.75%, taking off 50 basis points. That would now mean that the yen and the dollar is virtually at par, not very far from each other, 3.22% to 3.75%. Now, if we have that type of situation, it is going to be a lot of risk. All of those money, investors are going to be racing, especially Japanese investors, they're going to be racing to pull all of that money out of the US and pull it back into the Japanese economy to invest long-term in the Japanese economy. And for the US, that is a capital flight risk. So you can see that the Federal Reserve is actually at a very serious crossroads as to whether it should lower the interest rate. And now, when you also look at employment numbers, the unemployment numbers are very ugly in the US, down 13,000 since 2022, very low number since 2020. They have not been seen since 2022. And then you had a record number in the unemployment claims. You had over 27,000 people claiming unemployment benefits. That is to tell you that we have a very poor situation where we have high inflation and also high unemployment. Now, this is the type of situation that you refer to as, as stagflation. And then, of course, you are in a high interest rate environment. All of these things are not supposed to be happening at the same time. But now we are seeing a situation where you're having high inflation existing in the same environment as an environment where you're having unemployment, high unemployment, and equally a slow economic growth. Now, the economy is not growing, there's high inflation, and of course, the job numbers are terrible. Now, if the Federal Reserve say that they want to lower the interest rates in order to combat the situation, there is Japan. There is a risk of capital flight. And one thing that you're now seeing is that the entire global economy is heading towards a reset because, the yields are rising. It's rising in Canada. It's rising in the UK. In the UK, it's even outrageous. It's rising in the UK. We're at nearly over 5.22%, numbers that we haven't seen since maybe in the 90s. So the numbers are very high across the globe when it comes to high interest rates right now. And if we have these type of numbers, if the Fed makes one wrong move and lowers the interest rate, that could have a very serious adverse effect, across the board. And of course, imagine everyone racing to actually move their dollars out, to move into the pound, to move into the pound, to move into the yen, to move across the board. The dollar is seriously going to take a very serious hit. And of course, it's going to impact the stock market. So, these are speculations. These are my opinions. These are the things that I'm thinking. Of course, speaking to you from Chihuahua Trading Academy as well. So, ladies and gentlemen, if you are interested in this type of content, you want to get this type of fundamental knowledge, fundamental trading ideas, I encourage you to join our free Telegram community. It's absolutely free. You can get in there, get trading ideas, get trade alerts. Of course, when I get into trades, I do share them. I do share updates. And of course, I do share these types of fundamental and technical analysis as well. So if it's something you're interested in, hit the link wherever you find this video. If it's on TikTok, Instagram, wherever you find the video, the link to our channel is definitely going to be wherever you find the video. So I'm very happy to see you on the inside. Cheers.